So I'll start with you, Soo Romanoff. Give us your thoughts on what's going on here in the healthcare sector. We just named a few names. Which ones are you seeing some strength in?
We'd focus more on those the companies focused on addressing consumer pressing needs more than the elective needs of consumers, such as extreme example would be dental.
Yeah, so tell me about that. Which ones do you like these days and why?
So in the short term, we like those the larger distributors such as Cardinal Health, McKesson, and AmerisourceBergen, maybe away from the ones that are focused on that have complex ownership, such as Premier or Patterson or Henry Schein, since those are focused on dental and animal health. We also like longer term. We like Teva and Viva. Those are a little bit different as far as one being a little bit of an underdog and the other having fared pretty well in the market so far.
And Nate, where do you stand?
So we tend to lean bullish on healthcare. We've been overweight for probably the last few years, just given three primary things, right? There's just the growth trend of aging demographics worldwide. There's the fact that a lot of the companies were kind of in the penalty box due to the Medicare for All headwinds with the U.S. election around the corner. And then most recently, you've seen this big value disconnect on the relative value of the sector versus just the broad index. So that kind of points to us of being overweight the sector. A few subsectors within there. We like the biotech space and the device space in particularly. That's some names that we've been adding to on the pullback in the last 35 days.
Yeah, and you feel like the spending on COVID-19, Nate, will continue? Is that why another reason you like healthcare?
So that, I mean, the pandemic has accelerated the spending very much so for the worldwide, for governments in particular. You saw that the infrastructure just really isn't there for anything of the magnitude that we saw. The U.S. government in general probably spend anywhere from 20 to 30% annually this year than last year. So that's a lot of dollars flowing into the healthcare system that should flow through all the way through the supply chain.
Yeah, Soo Romanoff, you mentioned some of the others. You mentioned Teva, Viva, and I think Walgreens was on your list too, right? Tell me about Walgreens.
Yeah, Walgreens is a really kind of a longer term company that's pretty interesting, especially if they can convert their consumers and improve the utilization of their stores. They have a lot of partnerships now that they're working on. If they can improve the utilization of their stores and draw more traffic, I think that will be very beneficial. They have a very attractive dividend yield, so that might be something that kind of draws investors also.
Yeah, and Nate, I know you were looking at BMY and Intuitive Surgical. Quick thought on Intuitive in particular.
Yeah, so we've talked Intuitive before on your program, but generally it's just been beaten up as elective procedures have kind of gone by the wayside given the COVID-19 pandemic. We expect those to snap back relatively strong in the back half of the year as the ICUs and the other intensive care units really don't need the beds to treat COVID unless we have another wave of them. Hopefully we don't. So Intuitive, just in general, leader in robotic surgery, have the best market share, have the best margins, and we think these guys benefit in a normalized environment.
Sue, as an equity analyst over at Morningstar, is it tough to make some of these calls in this environment? I mean, what effects, because a lot of companies are withdrawing their guidance. What's your outlook here?
Yeah, I think it's you have to pare back some of the noise there because we kind of look longer term and look for quality companies that are sustainable and generating profits. Some examples would be right now there's a really big draw for telemedicine, and we've kind of see some of those shares trading at unsustainable levels right now. So we would generally just focus more on like the quality companies that have strong cash flows and are a little bit more moaty.
Right, and you mentioned Align and Dentsply, and Strawman, you mentioned dental as one of your key areas. One more quick thought on dental.
Yeah, so dental is a little bit tougher right now, I think, in the short term, especially since a lot of offices are closed. It's more of an elective area. I'd say when it comes back, and we've kind of seen the shares pull, kind of improve back where at historical levels, in advance of kind of the loosening. But if you wanted to look at some dental names, you probably look at Straumann since it's a little bit moody. They're a little bit more differentiated than the other two.
Yeah. And Nate, final thoughts. I know you're overweight healthcare overall. Are you changing any positions? What's your outlook here?
No, we're steadfast in healthcare. We continue to be overweight meaningfully. Other favorite sectors, tech. We try to bridge the gap between healthcare and tech. That's why we tend to favor more of the devices. And then we sprinkle in some of those relative value plays like a Bristol, right? Trading less than 10 times earnings. To your other guest points, strong balance sheet, good cash flows, low debt. And also, given the fact that they closed the Celgene acquisition,
right.
The pipeline is much better, and they focus more. It's more of a pure play on cancer, and we all know that the sooner we can find a cure for cancer, the better.